Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. The month continues developing as we are now probing within the upper half of May's range. As mentioned on Friday briefing, the weekly one-time framing lower has been stopped and the week has closed very strongly as an outside bar with a weekly excess in place. On the daily, we see that the move up has been very sharp, with four successive session closes within the upper 25% of the sessions of the ranges of that day, and now we have a 4-day one-time framing up. Earlier in the week, when we re-enter the previous balancing range, this constitutes a failed breakout, so to speak, and we re-enter and we close there and we immediately found acceptance and value. When this happens, it's normal that we see that when you fail on one side of the break, the other side of the one side of the range, the other side of the range often becomes the destination. Well, this week we had a sharp move and now we are almost there on that other side. It is important to remember that the upper side of that range, which is a 28.94 area, has a weak structure. It has already been tested a few times. Actually, here, when we first entered, we tested, we came lower, and actually we rally, leaving this daily excess there, and we tested to the tick again, and then we broke down. So now we need to remember that that weak structure is there, and the proximity take us there is a very, very important thing. With the information in all time frames, monthly, weekly, and the daily, I think we have good odds that we take that high, that 28.94, relatively soon. If we don't take it, failure to do so, that would be something to pay attention because that could expose weakness. One important thing that I noticed on my analysis, my preparation, is that this week the move has been very sharp. I have not seen a move this sharp in a while, like 4 big range sessions, open at the bottom, closing at the top in a row. But the interesting thing is not that, is that while we have this sharp move, the volume has not been following up on that fashion. So I normally monitor the futures volume, which is more or less oscillating around normal levels, and the underlying volume, which is the whole New York Stock Exchange traded volume. Now, interestingly enough, the last few days, volume has been coming down. So that there could be a lot of reasons for that, but I'll keep that as a warning. I keep that in my radar because if this is going up this sharply, remember this is a future contract of the S&P 500, but the underlying market is seeing a decrease in volume as prices go up. This could be a lot of speculation in that direction, and that's dangerous. So we keep an eye on that. On the market profile, there's not much additional detail. We had an opening with a gap. The gap held through the day, and the market started driving up post the NFP report, and we started accepting the highs, and we had multiple distributions in accordance with the move. So normal push up, balancing, and we accepted. Under normal circumstances, I would be a little bit concerned with the questionable high being so close to the next reference to the upside. But given the extent of the move that we had, this was quite a huge move. And on the overnight, we also had a lot of push to the upside. So that somehow justifies not taking it. It's also important to keep that on the radar that we came very close. If something happens and we don't make it there and we start going down, that could have been a good clue. But keep it on the radar, take it with a pinch of salt because the move to the upside was significant on Friday. So the immediate focus is on value development relative to the upper distribution. with acceptance below the afternoon pullback at 28.70.75, denoting change. Notice that this is exactly one tick above halfback, so this reference over here is not that strong. It's very questionable. But again, uh, if we do get acceptance below this, that will increase the odds of the market finding balance at least short term in this area. I wouldn't say it's an immediate signal for a reversal, but it's just suggesting that the upside is a little bit tired. Uh, on the other hand, if we get acceptance within or above, odds for continuation, as we saw on the larger timeframes, are good. Remember, anything can happen. Odds are just odds, so just keep doing what we've been doing. Try to do a very objective assessment of what's going on and make your calls based on that. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Any opinions, news, research, analysis, prices, or other information offered by Grasping the Market is provided as general market commentary and does not constitute or replace investment advice. Grasping the Market accepts no liability for any loss or damage, including without limitation to any loss of profit which may arise directly or indirectly from the use or reliance on such information.